We've been joined by two guests to discuss that one by one. In the studios, we've been joined by Shoaib Janjua Saab. He's a financial securities expert. Thank you very much, Shoaib Saab, to have joined us. And online, we've been joined by Dr. Usman Chohan, who's an advisor on economy with CAS, and of course, very dear political economist who has been there for us whenever there is anything important to discuss. Thank you very much, Usman. I'll begin with you, Usman. Usman, the government has implemented several relief measures in the year 2024. Regular meetings of National Price Monitoring Committee, Competition Commission of Pakistan taking measures to control cartelization and undue profiteering, Ministry of National Food Security and Research, improving the supply chain of essential food items, declining electricity charges and motor fuel prices, enhanced allocations of BISP welfare schemes, 10% reduction in Pakistan Railways fares, and this multi-pronged strategy to combat inflation that has now come in the single digits. How do you see all these measures taken by the government? Are we moving, in your point of view, in the right direction? Does this achievement and more that we'll discuss a bit further in the show boding well for the country's economic stability? Is it setting the stage for a stabilized and sustained growth and development?
First of all, thank you for having me on the show. It's always a pleasure. Yes, you're right that these are the signs of a turnaround, and these are the sorts of measures that help to reinforce the trajectory towards positive growth. We've had a tough 5 years as a global economic community, particularly the developing world, as we've talked about extensively. Pakistan was in a difficult situation, just like many other countries. But what you see now is the green shoots, solid green shoots, as in symbols of improvement and a reversal of that negative trajectory that have to be reinforced with important measures. The measures that you have just listed, vis-a-vis transport, vis-a-vis food security, these all matter in making sure that the benefits and dividends of tough economic measures actually pass down to the people, because what the government has sought to do is, while it adheres to a strict IMF guided regime for reinforcing its economic fundamentals, it also does care that the people do not bear an undue burden. It has been hard for the public, but that is common across many countries. So if you have these kinds of measures, which you have defined as relief measures, it's absolutely right. They are part of the balance that the government seeks in order to make sure that the public does participate in that austerity effort, while at the same time not having an undue pressure. And so I believe that these are the sorts of measures that actually bring a ground reality in terms of meaningful change. You have to have these targeted measures to improve specific areas where specific bottlenecks exist. Once these specific bottlenecks are addressed, you then see the austerity program, which has been top-down by nature always, come into a grassroots level. These are precisely the sorts of things that one would need to see translation of a broader strategic concept of economic reform brought down to actual measures that are then more robust in the longer term.
All right. Shoaib Janjua Saab,
Sir.
KSC 100 index.
Sir.
Benchmarks we have never ever seen in Pakistan's history. And still there was a little decline, then it has jumped back up. More than 100,000. We never in our wildest of dreams had thought that the KSC 100 index would reach, or PSX would reach 100,000. It has gone even beyond 115,000, now 112,000. Then the current account balance in the July-November fiscal year 2025 posted a surplus of $0.94 billion against a deficit of $1.6 billion in the same period last year. Current account deficit narrowed down a little bit before, but now it's back. Trade deficit, July-November fiscal year 2025, because 1st of October is the fiscal year 2025, increased by 9.6%. Workers' remittances, July to November, increased by 33.6%. FDI during July-November increased by 31.3%. And of course, Pakistan also attracted $230 million in foreign investment in May this year, and Treasury bills, the highest inflow in 4 years. Combined together, how do you view 2024?
Sir, thank you very much for taking me on the air. It has been always a pleasure. If you ask me that whenever we're going to write a signature story for stock market about, especially about 2024, we would say that this was the year that the stock market has actually bulls have really commanded the stock market, but the bulls have never come at their own. But there were certain fundamental changes within the economy, as highlighted by our earlier friend, that those structural changes, they were very painful, but once they started, their impact started reaching to the public, and especially when we had got the note from the IMF, and the inflation numbers and the interest rate, they all become so conducive that the stock market went upward and started defying the gravity. So we would say that this whole bull's run had a reason to be there.
All right. So, I mean, but I think a benchmark has been set as far as 2024 is concerned. And this benchmark, I don't know whether 2025 will be able to break it or not. But nevertheless, this is going to be an interesting precedent that we'll see next year, whether it be followed by much better indicators or not. This is something that I'll discuss a bit later. But Usman, coming to you, the GDP growth for fiscal year 2024 is estimated at 2.52%. In July to November, incorporation of companies registered with the SECP increased by 13.1%. FBR tax collection July to November increased by 23.3%. The KSE 100 index, we've talked about it. This and more indicators that I've also talked to Shoaib about, the KSE 100 index, the current account deficit reducing, workers' remittances increasing, FDI increasing, and of course foreign investment in T-bills that we've never seen in the last 4 years. What is your impression if I were to ask you what 2024 meant to you economically?
2024 meant to me that there is a concrete reversal in the midst of a very difficult global decade, the toughest one so far in the last 50 years for the world economy. So 2024 marks that turnaround. You had the COVID and post-COVID events, very difficult. Now these indicators all signify that there is something different in the air. This, I hope, is long lasting. I'm not speaking from a domestic perspective, but also internationally. I hope it's long lasting because, as you know, we're about to witness some tremendous changes in the global economy driven by a new US administration. This administration is coming with a totally different agenda for the world economy. It may involve far more unilateralism. It may even involve perhaps bullying of countries, the rejection of globalization, the creation of barriers to trade, protectionism. These are the sorts of things that, as countries have just emerged from a very difficult half decade, are probably not ready for. And to think through what might happen versus what will actually happen is extremely difficult. So I would like for these changes being wrought on the global economy, and then at the domestic level, all of the positive things that you have mentioned. The stock market is just one of them, but the inflation, the growth, the employment, all these things that are the registration of companies, even that is an interesting indicator that these are the marks of robust, internally driven growth. As we switch from the austerity program back to the austerity paradigm, back to a growth paradigm, and that GDP therefore increases with time, that all of these exogenous forces that are also likely to come about, for which the magnitude is not yet known, don't throw a wrench too great in the system. So what I am saying is that things look good now, and I would like this to continue, but we just don't know what the world would look like for the second half of this decade.
That's true. That's true. Well, you know, there's a lot of question marks regarding what 2025 has in store, and of course later years as well, the next 3 or 4 years. Let's see. I mean, keeping our fingers crossed. Shoaib Saab, the OICCI's Waves 26 Business Confidence Survey for October-November 2024 reveals a substantial improvement in the overall business sentiment in Pakistan. The Business Confidence Index rose by 9 percentage points. The State Bank of Pakistan in December, we all know, reduced its key policy rate by 200 basis points to 13%. This marks the 5th consecutive cut since June 2024. Of course, this is to stimulate economic growth amid easing inflation as well. Does this, in your point of view, reaffirm a positive outlook for Pakistan's economy in 2024 and also maybe for the fiscal year 2025 that continues in 2025, driven by better economic growth, stable exchange rate, easing inflation, and of course confidence, reinforcing confidence in the country's business environment? We begin therein on the business sentiment as well. How do you foresee that now that 2024 is ending?
Sir, if we take the last 25th survey, then the business confidence, only the 34% of the respondents were then having a very bullish or an optimistic look about the future economy.
All right.
But right now, the latest survey that shows that 43%. So there's almost 11% increase of those respondents were positive that the worst time is over and good times are coming. As we know, the economic structural changes, they are a bit difficult on the surface, but they are a little bit time consuming. But once they start, they are implemented and their fruits start reaping, they start trickling down to the retail levels as well, to the individual levels as well. So right now the business confidence with interest rates very low, historic low in Pakistan, we understand that as the credit will the financial industry will start dispersing credit to the small and medium-sized businesses, then the economic outlook would further improve, and we are expecting 2.5 and 2.8 GDP growth for the next year, but probably the number would come eventually higher than this. What is right now, what the analysts or the multilaterals are anticipating about us. So we would see that in the times to come, the economic, all these factors would actually start yielding the positive results, and economic outlook would definitely improve.
Usman, some of the key milestones, let's talk about that as well, because I want to remain optimistic, positive, at least today, because I've seen so many good indicators that, I need to highlight that for our audience and discuss it with you. Pakistan's business confidence and investment climate, how some measures have improved it. European Parliament extends Pakistan's GSP plus status until 2027. The SCO summit that takes place in this year between the 15th to the 16th October 2024, and wherein Pakistan's role in regional cooperation is highlighted, and of course the number of countries that were there were proof of that. After a 4-year suspension, Usman, PIA is set to resume flights to Europe starting with Paris on the 10th of January 2025. This also will facilitate trade and tourism. Does the coming year, in your point of view, sound more promising with milestones such as these?
It certainly does if you look at it endogenously. These are the first steps towards a broader, widespread recovery. If we look purely at the endogenous model, the signs that you have provided are unassailable proof that things are better. No one should be a pessimist just for the sake of it, and I fully endorse that. You are, mashallah, a person of a very resilient and optimistic temperament. I think we can all draw upon this example, and I don't want to spread any unnecessary negativity, unnecessary being the operative word. We need to have a recognition of the merits of the tough choices that had to be made, and contrast how difficult the beginning of this year was with how things have been in the last quarter of the year. Things were very, very hard, and it wasn't easy to make the choices that were made. And nobody was anticipating that things might turn around at a certain schedule, one that ended up being even faster than the mean consensus forecast was. So these things stand on their own merit. When you take tough choices, tough decisions in the national interest, you may have to take some pain, but you will see the dividends of that in the longer run. Some of those dividends have appeared faster than one expected. The stock market is just a minor example of that, but we have to keep in mind that the road to progress is never an easy one. It is always an ongoing struggle. Even the countries that you might have considered exemplary economically have faced hurdles, more acute ones in recent times. So it is always an ongoing struggle where everybody has to be on the same page. And on that journey, if you get some good signs, take the time to enjoy them and celebrate them. And I think that is the spirit of our discussion today.
Exactly, and that should be the spirit, inshallah, in 2025 as well, if things go the way they are moving forward. Coming to you, Shoaib Saab, Let's talk a little bit about the business climate as well. When you look at the credit ratings that have been given, Fitch upgrades Pakistan's credit rating to CCC plus in 2024. Moody's revises Pakistan's credit ratings to CAA2 with a positive outlook, which highlights confidence in Pakistan's fiscal reforms and economic resilience. Fiscal reforms and economic resilience seem to be two key words when it comes to these credit ratings. Do you feel that these reforms and resilience are indication for a more robust business climate for Pakistan?
Well, if you sum up Pakistan's last 2 decades economic performance, we have very consistent bouts of boom and bust, right? Right, but probably right now the current government's focus has shifted from a long-term strategic view of economic management rather than making a short-term decision. So whatever we saw in the last 18 months, the certain steps taken by the government which were very painful, and it was the rising food prices and the energy and the petrol prices, all of them were very difficult for the common people. But these were the challenging tasks that the government uptake in order to revive the things and move the things in the right direction. So basically right now even the Fitch and those credit rating agencies, at that time they downgraded us because they had a doubt that we will not be having the capacity to fulfill our obligations. But right now that cloud of uncertainty has actually shed, is over, and upcoming we would see that things will actually go better, and we will have the better outcomes and better results. Economically we will perform far more better. So there is nothing to worry that our economy has a very sound fundamentals. We needed the direction, but that direction is right here.
That direction is right here, it's here to stay. But the fact is also that I love to highlight the facts and figures that we have with us for 2024, because these are the facts and figures and these need to be highlighted as much as possible. Usman, last question as far as you are concerned. International agreements, investments, the IMF. Let's talk about the 9th month agreement, then the new agreement in September 2024, the 7 billion funding agreement to further stabilize Pakistan's economy. You add to that the Saudi investment in Pakistan. Well, in October this very year, Saudi and Pakistani businessmen signed 27 MOUs worth $2 billion that focus on industry, technology, agriculture and energy. Then BYD's expansion into Pakistan. In August this year, Chinese electric vehicle, the BYD announced plans to establish a car production plant in Pakistan and also launch 3 models through a partnership with a company in Pakistan. Do you feel developments such as these reflect a dynamic social environment, economic environment in Pakistan with both challenges and positive strides that influence business and investor confidence during this period?
Yes, there are 2 elements to this, and I agree on both fronts. The first is the dynamism of an economic nature. I think that the fact that deal makers are coming here is a good sign. The need for investment here is necessary not just for us, but for the investors from abroad as well. Look at the long-term demographic profile of the countries we're talking about. If Europe, the United States, the Gulf region, and China are not investing in South Asian countries such as Pakistan, then they're not getting the maximum return. The future belongs to South Asia and Africa. This is where the markets of the future lie. This is where the labor pools of the future lie. And yes, they have not achieved their maximum potential yet, but they're all on their way. So the fact that delegations come here will probably not just be for our benefit, but also theirs. It's a two-way street, and we should keep that pragmatism as well, that if those countries aren't investing here, then what are they doing? This is the future. The second is on the technological front, and the landscape of technology in Pakistan is changing dramatically in the first quarter of the 21st century, which is now coming to its close with this month, and we're entering the second quarter of the 21st century. The technological shifts will be extremely important in terms of solarization, electric vehicles, many things that one wishes had existed in the past because they're suited to our geography, suited to our consumption needs. Thankfully, they are arriving one after the other, and we should ride this wave out through the second quarter of the 21st century, having electric vehicles, solar, and all these things that have more sustainability, better suited for us, and just drives our economy forward. These are the things that will characterize this next quarter of our century.
Thank you so very much, Dr. Usman Chohan, to have joined us online. Thank you so very much to Shoaib Janjua, financial securities expert, to have joined us. It's so interesting, you know, when we discuss with two specialists on where our economy has gone in 2024 and what should we look forward to in 2025. But, you know, I need to highlight the positive aspects. I need to also see that we look forward to a very, very positive 2025 when it comes to our economy. Let's keep our fingers crossed and let's keep working in the right direction. Thank you very much.